This week, the market hits record high. Apple became the first US company to reach the market cap of $2 trillion. Tesla crossed the $2,000 mark. Finally, AMC was able to reopen some theaters. Uber and Lyft were granted a temporary reprieve, and we had some huge earnings last week. And also, we have some more coming up. Hello guys, welcome to another financial news video. Please smash that like button and subscribe since it really helps my channel out. Let's start with the video. It was a record-breaking week. The Nasdaq ended the week up by 0.42%. The Dow Jones was almost flat and ended the week down by 0.08%. Lastly, the S&P 500 ended up by 0.48%. The thing is that the S&P 500 finally hit record high. Both the S&P and the Nasdaq had their fourth consecutive weekly gains, while the Dow Jones has been almost flat. It took us 5 months to see the stocks rebound from the huge crash and even be able to reach all-time high, which obviously is impressive to see this huge rebound in such little time. I have to be honest, I thought that it was going to take even longer. If we see what happened in 2008, it took years and years to recover. The difference was that in this year's crash, the Fed actually acted really fast. They started decreasing interest rates way before the crash, and after it, they started pumping money into the economy to help with the rebound. And obviously, let me tell you that without that, it would have been harder and would have taken longer to get to where we are right now. Then we have Apple, becoming the first US company to reach a $2 trillion market cap, and it was only 2 years ago when we saw them get to the $1 trillion market cap. You know how huge is that? Being able and seeing a company doubling their market cap from $1 trillion to $2 trillion in just 2 years. It was the first company to get to $1 trillion market cap, and then we saw Microsoft, Google, and Amazon, and now history repeats and Apple is the first company to hit a market cap of $2 trillion. In my opinion, this huge rally in Apple stock started when they reported an incredible quarter, smashing analyst expectations. Plus, they announced a 4-for-1 stock split, which apparently investors seem to like a lot. Now, in my opinion, the stock split should not justify a huge rally like what happened with Apple, because as I said before, a stock split does not change anything in the company. It does not change the company's fundamental nor their valuation. What this tells me is that there are a lot of people gambling and assuming that the stock price will go higher after the stock split, mainly because more people will have accessibility to it, which is correct, but that does not justify a rally like this one in such a stock like Apple. Then Tesla crossed the $2,000 mark just 2 months after crossing the $1,000 mark. It has been a huge rally for the stock during 2020, but the latest surge in it was because of the upcoming stock split. Again, this does not justify a rally. It is just people gambling and assuming that the stock price will never stop going up. I'm not throwing any hate here to Tesla stock, I'm just being realistic. Yes, more people will be able to invest in the stock, and yes, the price will be cheaper, but nothing changes. Absolutely nothing changes, and that does not justify any rally. Now, next month, Tesla has a major battery event planned in which Elon Musk has been promising to reveal huge advances in the company's battery technology. I'm pretty excited to know what they have to say about the battery. Are they going to convert to a battery supplier as some analysts are expecting? Are they going to introduce a new low-cost, long-life battery? Will Elon Musk announce a long-lasting 1 million mile battery? I think that this event could say a lot of things about the company. I do think that the stock valuation is pretty rich right now, but I'm really curious on what they're going to say in this event. Now, after 5 months, AMC Theaters is finally reopening their doors. They opened 113 locations across the US, obviously with huge safety measures and only accepting 30% capacity, which is only 25 people per screen. Also, they came back with a retro screen and a retro pricing to motivate the audience to go back to the movies. They started offering tickets for as low as 15 cents, which is definitely very attractive. Obviously, it is kind of a relief for the company to be able to open their doors again, but still they have only opened 113 out of 661 theaters here in the US and with 30% capacity. I would really like to know your opinion about this. Do you think AMC will be able to survive this pandemic? and will be able to open all their theaters back again? Or do you think they will go bankrupt? I mean, it is a $567 million company and was actually doing fine before all this, with kind of a steady revenue but very unstable income. Do you think people will feel comfortable enough to go back, or do you think people would prefer to stay home, buy some movie online, and watch it from the comfort of their couch? Last week, I talked about the possibility of Uber and Lyft shutting down in California. As I said, they have been in a huge battle with the state of California for months now because of a law the state wants to make effective, which requires their drivers to be classified as employees. This company threatened to suspend their services there, and before the blackout was set to begin, an appeals court granted Uber and Lyft a temporary reprieve, meaning that they will be able to continue operating as they normally do while the court waits their appeal. State officials explained that they want drivers to have sick days, health benefits, and overtime, while Uber and Lyft argued that employing drivers would have a catastrophic impact on their businesses, forcing them to raise fares and hire only a small fraction of the drivers who currently work for them. They would temporarily shut down the business rather to comply. Not only that, in my opinion, drivers will not have the flexibility to work for other apps and might be asked to work a certain amount of hours or certain amount of drives a day. Also, both companies are backing a ballot measure which eligible voters will have the opportunity to decide over this matter on election day. This could exempt their business from the AB5, which is the law they are fighting over, while providing some benefits to the driver. For example, for drivers who average at least 25 hours per week of engaged time during calendar quarter, those drivers will get healthcare equal to 82% the average California covered premium each month. The thing is that it wouldn't be the first time that Uber and Lyft shut down in a state. In 2016, Uber and Lyft shut down in Austin, Texas to protest an ordinance that required background checks that use fingerprints for drivers. They returned the next year after Texas passed a statewide law that excludes fingerprinting from the background check. Obviously, California might count for a bigger revenue percentage in comparison to Texas, but what I want to say with this is that both Uber and Lyft will find a way to continue its business one way or another. I do not think they will let their business get affected by that. A very important thing to take into consideration is that if this gets approved in California, other big states like New York, Florida, or Massachusetts will want to do the same and will have a huge impact on the company throughout the USA. But we will have to just wait and see what happens in California, if they come up with a solution or not. Now, last week we had huge companies reporting earnings such as NIO, Walmart, Nvidia, Target, Alibaba, and more. Let me do a very fast overview of some of them. First, Walmart. They reported an increase in revenue of 5.6%, with an increase of 9.5% in their US operations, a decrease of 6.8% in Walmart International, and lastly, an 8.8% increase in Sam's Club. Still, their e-commerce sales grew 97%. Walmart CEO said that Walmart was thinking about adding a membership service in order to build up their gains. According to what he said, this service will speed up deliveries for customers that use curbside pickup and delivery, and will also help them collect valuable data, which in my opinion is something that they should definitely do. In my opinion, they did pretty well. Their revenue just continues increasing, and with a membership service, they will have more room to grow. Then Target. They also announced a huge quarter with a revenue of $23 billion. But the huge thing was that the same store sales growth is more than 24%, while analysts were only expecting an increase of around 7%. Because of that, Target stock jumped almost 12% to hit all-time high the day after they reported earnings. Then Alibaba. Their revenue increased 34% year over year, and their net income increased 143%, which is huge. According to the CFO, their domestic core commerce has fully recovered to pre-pandemic levels. Their core commerce in China grew 34%, their cloud computing increased to a whopping 59%, digital media and entertainment 9%, and their smallest segment, innovation initiatives and others, actually decreased 6%. The only thing is that their annual active consumers increased 10%, which was the slowest rate growth the company has posted since 2018 and was a continuation of the deceleration trend that had begun in 2019. Now, next week we have companies like Best Buy, Box, Intuit, Ulta, and more reporting earnings. First, Box. They provide a cloud content management and file sharing service for businesses. It is a company that has had an exponential growth in their revenue over years, but definitely cannot say the same with their net income. Analysts are expecting them to have an increase of 9.90% for the year and 9.80% for 2021. Also, in this chart, you can see what analysts are forecasting for the stock price. They have a low target of $17, and median target of $24, and a high target of $25 per share. I hope you enjoyed the video. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.